the market could fall big this week based on what is going to happen on Friday. Last week, the UK came out and said that they were going to raise interest rates and cut taxes from 45% to 40%. The reaction was severe. Not only over there, it sent their British pound to lows of the past decade and a half. And in the United States, it caused some turbulence because we were starting to think that we were going to have some dovishness from the Fed. The Fed came out, said that was not going to happen, and the stock market just completely plummeted. And let's take a look over here. Over the last 2 weeks, the market has been down. This is the S&P. The market has been down about 10% over the last 2 weeks. And this is the third quarter in a row of losses in the S&P. And that has not happened since the 2008 financial crisis. Oh, also, Micron and Nike reported last week. What happened with both of those? Nike came in and said, we have massive supply chain issues that are going to be occurring. And we have big issues over in China. That is very telling for the direction that the stock market goes, or retail companies go, based on sales. Nike is a catalyst on the hill that everybody looks for. Walmart has said that they are going to have issues. Target has said they are going to have issues. Then Micron came out, and they saw their revenue forecast just get banged up. Just like NVIDIA, just like Intel, just like AMD. So all of these little things pushed the stock market much, much lower over the last week, and I think that we're going to continue to see that volatility going into this week. Now, what do I want to see this week? What am I looking for? Well, there's some big numbers that I'm looking for. Today, speaking of volatility, look at today. We have the NASDAQ up over 1%, the Dow up almost 2%, and the S&P up 1.75%. So this alone just tells me that the volatility is there. Now, I don't know what the volume is right now, but we are starting to see these 2% big days. Maybe we're going to have 2 or 3% down days. This is just the continued volatility. Now, what am I looking for this week? Some of the data. Well, what I'm looking for, of course, is the jobs numbers that comes out on Friday. This is at Friday at 8:30 a.m. Eastern time. And what we're looking for is the non-farm payrolls. They are saying, the Labor Statistics Department is saying that we're going to see 250,000 gain in jobs creation. Now, with that being said, where is that going to lead? That is going to point people to say, hey, what is the Fed going to do? Let's say that this jobs number comes out at, expected as 250K, and let's say that it comes out at 290K. The question will become, is the Fed going to start thinking, hey, maybe we can trim some interest rates? Or if this number comes out, say 230K, are people going to get scared and say, hey, this is going in the exact direction that they have said? The Fed has said that we're going to have 4.4% unemployment by next year. Will that precipitate the Fed to raise interest rates higher because it's exactly in line with what they said in their last forecast? Now, something else I want to look at, construction spending. Why is this important to me? Because construction spending is a very big piece of the economy, and it also kind of tells me what's happening over in the housing department. You're looking at these companies like Pulte, MI Homes, Ryan Homes, all of these big builders. They need to say, they have a pretty good insight of what's going on. They deal with supply. They deal with selling homes. They deal with all of these different things, and that is something that I need to hear. I want to see what Caterpillar is going to do. If people are starting to use their products less, we could have some major issues. Durable goods come out. These are goods that coffee makers, anything that doesn't really have a shelf life. You need to go and look and see what the durable goods numbers are doing. These are very important. Also, materials. Go and check out what the materials are doing. These numbers are coming out today through Thursday. So these are the types of things that I like to look for to kind of get that hint of, hey, where are things going? Because it's not all about jobs. There's a lot of these big numbers behind the scene that you need to look for as well. Okay, guys, so we also talk about inflation. Inflation is sitting very high right now. No matter which way you spin this, 8.3% is still very high inflation, especially when you have wage growth going at 5%. Now, what's a big part of the inflation? What hurts you in the pocketbook? Gasoline and food. We have food prices still inflated over 10%. And a big thing that I'm looking at, and something that I read on the morning show this morning, is oil. So right now, if we look at Brent crude is up nearly 5% right now. Why? Because the big oil cartel are meeting in Austria this week. and they are OPEC Plus. That's their name. And what they are looking to do is cut oil by 1 million barrels per day. And what is that going to do to your oil prices? They're going up. They're going to go up, and they are being projected to go up over $100 per barrel. What is that going to do to your gasoline prices? They're going up as well. Not only is OPEC Plus meeting to talk about some type of cut to production, you also have the strategic reserves that are gone. So we were using strategic reserves in the United States to supply basically the oil economy to keep gas prices down. You're still paying $4 plus per gallon. It's not that low, but now that we're seeing this, now that we're seeing cold weather coming, now that we're seeing energy bills going up, all of this goes into this is a bad mixture for what's going to happen ahead. So you need to pay attention to oil going forward. This is something very important. It's up 5% right now, and you are starting to see this at West Texas Intermediate. You're seeing this in Brent crude. Oil is going up, and you need to pay attention to OPEC. So this sounds scary, but if you're not retiring in the next 10 years, you don't really have to worry about it. This is what you need to worry about. It's pretty easy. You need to worry about dollar cost averaging. Sometimes you are going to be the bug. Sometimes you are going to be the windshield. This is the stock market over a very long period of time, right? It's probably more like this, but for drawing purposes, let's make it straight up. Sometimes you are going to be buying like 2000, right after 2020, the COVID thing, when everything went up, you're going to be buying up here. You're going to be buying at very, very, very high valuations. That might sound great at the time because at this point you're thinking, hey, stocks only go up, right? Well, no, they don't. Sometimes you're going to be buying right here, right at neutral, right at fair value. And sometimes markets are going to be beaten down and you're going to be buying down here. It is very scary to buy down here because when we're right here, you're saying to yourself, hey, I think that stocks could go lower. Well, of course they can, but don't think about it that way. Think about it over a long-term horizon. If you're the person that's 25 years old and you're listening to this right now, you need to be looking at yourself right in here saying, okay, it is getting a little bit scary right now. But over here, when I'm 65 or when I'm 55 or whatever it is, the market will be better off today than it is than it is today. So this is your horizon right here. You need to dollar cost average in to something like SPY, VOO. There's so many different indexes. I personally go for my brother and myself into SPY, SPLG if you want something cheaper. But this is what you're going to do. You buy here, you buy here, you buy here, you buy here. Over a long period of time, it's going to balance out, and you will end up somewhere on this line down the road. Do not let interim volatility deter you from your plan. You need to stick to your plan, and over a long period of time, you will be better off for it. Guys, this is going to be a very exciting week. Paul's going to be reacting to a bunch of different things that happened throughout the week, and also we have a lot of stocks falling into our value territory. You look at Nike. $83 a share. Who thought that this would be here just a couple of months ago? If you really want to understand what we do, check out this 8-pillar video right here. It'll really help you cut down on your research time. Maybe you don't have time at home to do all the research yourself. We can help you in that way. Check this video out. Have a great week.
All of these together, guys, all of these tell me a story. What does it tell me about Microsoft? It's expensive. Now, obviously, if you watch our videos, the Stock Analyzer tool, which is phenomenal,